Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, look, we're getting a little bit of a rebound today. Today, I'm seeing a lot more green on my screen. US dollar is moving down. I'm seeing a lot of this being predicated on what the Bank of England did in terms of trying to support their bond market. We are also seeing bond yields move lower in the US. Again, a bit of a reprieve from this pretty bad selling pressure that we saw, especially to end last week and then even starting this week. Let's start with those weekly closes from last week because we've had a lot of people that came on the show that were especially watching gold and that 1675 level on a weekly basis. Unfortunately, gold closed below that level for the week and is still slightly under that level even after the rebound that we are seeing today. Jordan, how important, how critical was last week's weekly close in that whole theory of 1675 being what should have been strong support?
Well, I mean, it's obviously critical. I mean, I think it's more critical in a short to medium term sense. I don't think, I mean, not to get into the nitty gritty, but, one thing we were talking about, if you look at gold, and one thing about 2013 is there were two multi-month rallies off that support in the mid 1500s. And if you look at gold this time around, it only rallied for a couple weeks back. I think it was in July, basically in the high 1600s. So if you look on the monthly chart, if you look at a monthly or a weekly line chart, most people look at candle charts nowadays because that's the default. If you only look at closing prices, you can see this where the real significant breakdown was breaking the uptrend line from the beginning of 21. Now, normally I would say, and I do say that you have to favor horizontal lines over trend lines because we see people using these trend lines on charts where they're just connecting things that are not related. And so in most cases, you really want to default to horizontal lines. But in this case, if you look at that trend line from the beginning of 2021, I mean, and you're looking at a daily, week, or weekly, or even monthly line chart, there are multiple times where the market came down and was supported by that trend line. I think on the daily trend line, like there's 6 different times. And so when gold lost that uptrend line, which I think happened, I want to say sometime in the summer this year, that's when it broke below and traded down to the 1700s. Then we had this weak rally after going to the high 1600s, and now it's coming down again. I mean, yes, it has broken 1675, but on a closing price basis, the previous 2 weeks, it already did that. So it has broken down on a daily and weekly basis. And yeah, we got a couple days left in the month. So, I mean, unless gold can somehow close above 1700, then you have a monthly breakdown in terms of that price. So I don't mean to talk all over the place, but the point is this is a significant breakdown for sure. But I think it's like a short to medium term significance and not like primary trend or intermediate significance that happened in 2013. And I mean, there's a whole host of reasons for that. I mean, the economic situation is different. We're getting, towards the end of Fed tightening. The stock market is obviously breaking down. It's really at risk of losing its 40-month moving average and going into a secular bear. Economy's going into recession. So, I mean, this is more like 2008, in my opinion, although there's some, technical similarities to 2013. But looking at the prices, I mean, clearly now, if you look at that breakdown from the trend line I was talking about, that has measured downside to about 1580 to 1600. If you look at the 50% retracement, that comes in the mid 1500s. If you draw lots of horizontal lines going back 10, 12 years, you can see support in the mid 1500s. One other thing I'll mention is the 80-month moving average. If you look at that historically for gold, going back since gold started trading, there have been quite a few times where the 80-month moving average has been significant. That's in the low 1500s right now. So maybe that gets to 1530 or 1540 by the end of the year. So those are the levels, the support levels that I'm looking at right now. I mean, clearly it's broken down. The path of least resistance is lower, unless there's some spectacular recovery here in the next couple of days. But those are the levels that I would focus on.
Well, Jordan, I appreciate you sharing those support levels and moving averages that come in at those levels. And when you look at the mid 1500s or low 1500s, I know some people listening will be pretty disheartened by that because they were expecting the 1675 line to hold. They were actually hoping it never got tested again. And now it's clearly in a longer downturn. Many people thought in nominal terms that we've been in a bull market the last couple of years. And just as a refresher, and in March, we were over $2,000 in gold. So I mean, we've had a pretty big fall already this year. If we go down in the 1500s, do you think it negates the bullish setup that we have? Or is your position that that would coincide with the general stock market also correcting further and that is the point where we would start the new bull market?
Yeah, I mean, well, one thing is gold, I'm looking at a chart right now. Yesterday it traded at a low of 1627, closed at 1636. So 1627, I mean, that is a 2% decline from there. You're already in the 1590s. So, mentioning these levels in the 1500s, there's a lot of sticker shock with that, but it's really not that far away from where we are. So that's one thing. The second thing is we have all these things that are lining up favorably for gold to begin a new secular bull market. I mean, number one, we have the S&P 500 very likely to break its 40-month moving average. I mean, maybe it does a stick save here at the end of the week or the end of the month. But aside from that, if we're looking at the way everything is trending, it's very likely we're going into a secular bear for the stock market. And that's what we need that before gold can start a secular bull. So that's happening. In addition to that, you have the Fed is near the end of its tightening. They're going to be forced to cut rates at some point, in the coming months. 2, 3, 6 months, whatever. There's a recession. So all these things are really positive for gold if we're looking at medium term and beyond that. Now, I'm not talking about the next 1, 2, 3 months. There's technical damage. We could see lower prices. But beyond that, you have to look at all these things, look at what's going on. And that's what's going to set up the start of a real bull market in precious metals, because the best moves in precious metals, again, they were in the 1970s and the 2000s, and you had secular bear markets in stocks. That's when the best moves have come, aside from the mid to late 1960s, which has been a little bit like the last 6 years or so. So that's how I look at it. I mean, with respect to the stock market, so gold breaking down and trading lower, and if it continues lower into the 1500s, that's not going to bother me because that probably coincides with the stock market trading lower. If we look at the gold to the S&P 500 ratio, as you noted, gold's outperforming. I mean, nothing special, but it's outperforming. That ratio, if you look at the last secular bear, that ratio bottomed right around the time the stock market peaked in 2000. And I mean, the same thing happened this time around. If you look at that ratio at the end of last year, the end of 2021, the ratio basically bottomed then, and that's when the stock market peaked. So we're seeing another strong similarity. And yes, it's very disheartening that losses have been piling up. Gold has broken down here again, but looking at, sentiment, support levels, the macro picture, all these things are super, super bullish for gold, I would say, over the next 3, 6, 9, 12 months. But we're not quite there yet, but I'm definitely anticipating some kind of a big turn in the coming months, and that probably will coincide with more weakness. I mean, as far as when precious metals will detach from the stock market, it's probably going to be at the point when the market is really sniffing out that, okay, the Fed is going to have to cut rates, because when you get that, you're going to get some kind of market weakness where the stock market goes lower. Gold goes a little bit lower with that. And then when the market starts to sniff that out, that's when they'll diverge and gold will move the other way.
So, Jordan, what about the gold stocks? Because, look, as much as you want to look at gold outperforming the S&P, an argument can be made that gold underperformed the S&P when it made its run after. Well, gold has underperformed the S&P for almost the whole period from 2012 through to 2020. The problem being, even after the pandemic run higher, the stock market went even higher than gold did on a percentage basis. The biggest problem, though, being the stocks, because if you're trying to invest in the gold sector and make money in the gold sector, you go down to the stocks, you look at the stock chart, it's not pretty. You look at something like GDX, we've already broken to levels months before we were at the pandemic, when the pandemic crash happened. And quite frankly, GDX is trading in a range that it was back in 2015 through 2019. Is there any hope for the stocks, the gold stocks, to start outperforming the stock market?
Yeah, there's huge hope actually, because everything you're talking about, we were in a secular bear market in precious metals. Because if we look at the runs in gold and gold stocks, especially gold stocks, they've really done nothing aside from 2 or 3 different periods over the last 6 years. Gold did have this move from the summer of 2018 to summer of 2020. That was a real cyclical bull market, but that's the problem for the stocks, is that the stock market itself has been in a secular bull market over the last 10 years. As you noted, it's been making higher highs. Even in the last 2, 3, 4, 5 years, the stock market was making higher highs as gold and gold stocks recovered. But the stock market making higher highs during that period, that's what was preventing a real bull market in precious metals, because all the capital, or most of the capital, was moving into the stock market. Now we're going into a period where it's going to be the reverse, where it's a secular bear market for the stock market. Yes, in the next expansion, the stock market will do well for a couple years at least, but at the same time, that's when precious metals are going to really, really outperform, like they did in the 1930s, 1970s and 2000s. So that's the difference this time around. You're going to have a secular bear in the stock market, which means you have a secular bull in gold, and gold will make higher highs consistently. 1, 2, 3, 4, 5 years, gold will make higher highs during that period, which is completely different from what's happened recently. Other than the 2018 to 2020 period, gold, it hasn't been consistently making higher highs over the last 6 years. It's just a stop and goes up for 4 or 5 months, then it consolidates for 2 years, goes up a little bit again, and now we're at this sharp move down. But it comes back to the secular trend, and so that's what's going to be completely different over the next year and over the years ahead. Is you're in a secular bear now for the stock market and a secular bull for gold. And by the way, part of that secular bull is gold finally breaking out of that huge base going back to 2011. That's what happens in a secular bull. Gold will break out from that, and then it'll make higher highs over the years beyond that. And that's what's going to support the stocks making higher highs themselves and strongly outperforming the stock market.
Well, Jordan, let's briefly look at silver. Silver has not done as well as gold on the way up in some of these moves, and it has pulled back further. But recently, it's been a little stronger than gold. It did dive down into the mid 17, I think 1740 it got down to, and bounced up to the mid 1950s, 1960s just a week or two ago. It's pulled back down now and lost that $19 level, which some see as key support and resistance. It's in the mid $18 range right now. How are you looking at the setup in silver, and is it possible that it could diverge from gold and move higher even if gold doesn't, to kick things off in the precious metal sector?
Probably not. I don't think it's going to diverge from gold. We talked about it a week or two ago that there's potentially a non-confirmation there, but just looking at the chart, silver yesterday it closed at 1834. The recent low is at 1750. That's still a pretty big ask for silver to hold that, given my view that gold is probably going to trade down to the 1500s. I would think it's more likely than not that silver is probably going to go lower and make a lower low. But nevertheless, in the big picture, you have this huge short interest in SLV. A couple weeks ago, the net spec position in silver was, the speculators were actually net short. And so it was at the second most bullish point in its history. So we're definitely getting really, really close to a major turn. But again, thinking about the next couple weeks, month or so, there definitely is some risk that silver can make a lower low and that this non-confirmation will not hold. But at the same time, the other side of the coin is if gold doesn't trade as low as everyone thinks it will and it bottoms really soon, in that kind of scenario, then maybe silver can hold above 1750 and then it ends up being that silver actually bottomed before gold. I don't favor that scenario, but I think those are the two scenarios.
So when it does turn for the precious metals, Jordan, does it happen quickly? Is it a snapback V-shaped recovery, or is it going to take time to build a base and then launch off that base?
That's a really good question, Corey. It's something I've been thinking about, and it honestly depends it depends where the bottom is exactly, because the more oversold that precious metals get, especially in the next month or two, if they get really, really oversold and they go down even lower levels that I'm thinking about, then that could set up the potential for a real V bottom. Now, looking at GDXJ, for example, I mean, it traded as low as 26 yesterday. I mentioned to subscribers, there is this open gap in the 24s. In recent months, I was looking at 25, 26 as targets. But I mean, if GDXJ comes down and it ends up bottoming at 22 or 23, and that happens in the next month or so, then you would have the market, these stocks being so extremely oversold that you could see a real violent rebound. And so it really depends on how much more oversold they get. But there's definitely potential for a real violent rebound. If we look at what happened in 2020 and 2008, what happened is coming off both those bottoms, you had a really violent rebound and move higher. And then you had a quick retest that was also violent. And then after that, the market really started to take off. So I think that's the kind of scenario that we have to watch for at some point here. If the miners, if they begin a real violent rally with lots of really strong white candles. I mean, they're making strong white candles today, but you would need to see like a series of those for a couple weeks to think that, okay, this is the start of the market moving off the bottom. But that's something I'm potentially anticipating. But again, I will say GDXJ traded at 26 yesterday. If the bottom ends up being like 22 or 23, and that happens in the next month versus like 3 months from now, the market is going to be so extremely oversold that you can get like a V bottom coming off those levels. And I mean, it's the same thing for gold. If gold plunges down, to the 80-month moving average in the low 1500s, and it happens really quickly, I mean, you could see a V-shaped rebound off of that. However, if it takes a couple months and gold just kind of goes back and forth and drifts lower to the 1500s, in that kind of scenario, you probably would get less of a V rebound in gold.
All right, Jordan, thank you as always for your time, man. Hopefully we do get that rebound in the precious metals. I know a lot of our listeners are waiting for it, and boy, oh boy, it feels like we've been waiting for it for a long period of time. But everything is correcting. Everything is washed out. Everything has low daily sentiment index readings. It's just a tough market. But hey, today, little bit of light coming in for those traders. Jordan, thank you as always for your time. We'll chat next week. Have a great rest of your week.